Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray feeling good, Lewis. We'll start out the show looking at the FTSE and the DAX. As you can see, they're still in rally modes. They've may or may not have made some type of a top. It's still a little too early to tell. But, at least they've been bouncing around up to the upside today, which is pretty good. I know that the $50 question or $64 question today is about the gold market and stuff, folks. I'll do my best to tell you what I think is happening, and you'll have to go with what I think. And if you don't like that, then find something else. That's basically it. I try to keep things as absolutely as simple as I possibly can, folks. That's really what I do. That whole thing that I do with the opening price and the ABCD and the Floor Trader's Handbook, that's very simple stuff, and it works, and it doesn't work all the time, but it works more than it fails, and that's the whole key to what we're looking at. But we had a really interesting situation in gold. We had an interesting situation in silver. We had an interesting situation in crude oil. And I think we're going to be having one in stocks very, very shortly. But the ones that I just mentioned, gold, crude oil, and the silver, were really set up for something really major to happen. I'll go through that one at a time. The first chart I want to show you is the one that we looked at in fact, just last week. You remember here when we had that 50% retracement up here at the 1840 level, the market broke, and then we tried to get short at 1819. It got to 1818, missed the boat on that one, and then you can see here what's happened. This is just a 4-hour chart. You can see what happened in that 4-hour period. And what I'm going to do now is I'm just going to break this down to show you why it was not Ruby, time out. I use a linear scale, Bo. Linear scale is what I use. If it gets out of bounds, which is very rare, then I'll go to a log scale. But most everything, 99% is done with a thing. Ruby, I do not believe the markets are manipulated. You think that they are, but they really are not. Let me just show you what happened in the gold market. Okay, here's where we stood coming in. Now this is a daily chart. Now, okay, let me get this up here so you can be able to see it. This is the daily chart of the gold. Now, if you'll remember, you'll notice, you see there where it says the mean, that's where we closed on Friday. With that big down day, we closed right there on the mean at 1865, okay? Now, once we went below the low at 1769 on Sunday night, there was a flat-out vacuum. I mean, if you had a stop in there, if someone's in there and they've had a stop in, I would like to know how they were filled, because it was dropping $2 or more at a time. I wouldn't be surprised if you had $10 slippage, maybe even more on some of that stuff. But we went to one standard deviation there at 1722. We paused for a heartbeat and then went all the way down to 1675. Now, that is very, very important. And let me explain to you, if you read the newsletter at all, pay close attention to it, you'll have an idea of what we're trying to do here. But let's get the number here for the gold up here, so we'll be able to see it very, very closely. Here it is. This is that's the Treasury bonds. Just a minute, boys and girls. The old computer's sneaking up on me again. This will just take a second. Hold on. Let me get it up here. And there's where we want to get it up. Here's what we want to see. This is the weekly chart of the gold. Okay, the Wyckoff works. You bet your sweet Bippy. Wyckoff is good stuff. Wyckoff was a good friend of Mr. Gartley. Anyway, you'll notice here that the target on this is the weekly target. Now look there where it says 1673.30. Folks, the low on the bonds was 1675. This missed this by $1.70. And if you had an order sitting there, you wouldn't have gotten filled. And that's the irony of the thing. However, However, back on the old trail, if you would have done this with the silver market, and silver did, let's get this up here, you'll see silver did pretty much the same thing. This was a tremendous move here. Did anybody have any stops in on gold on the way down that happened to be long, and whether they got a bad fill or not? Would just let me know, because I'm not, I don't do public stuff, so I don't have access to a whole bunch of questions. But if you had a bad fill, just private message me. I don't want to announce it or anything. I just like to know from a personal standpoint. Now, if you look here, this happens to be the silver chart. You'll notice we did the same thing in silver. You see the opening was there where we had the really big break. That was, it closed at around 24.30. Remember look how it stayed there for 4 hours, right at the mean price there on Friday. Just bang, just didn't move anything. And that's why when it started to break, when it took out the lows of Friday, that was it. The doors opened and down it went. For the next hour, exactly 1 hour, we went down all the way to 22. The low was 22.27. I know it's hard to believe, but take a look at this, folks. If we look at silver now, we're going to take a look at silver. This is the one we've been waiting for a long time. Now, I will make some comments on this in just a second here, but if you look here, you'll see this is the silver on the weekly chart, and that number we were looking at came in at around, the 382 came in around 22.80. Well, we got all the way down to 22.30. So now all you have to do now is to take the silver and blow it up a little bit, and you'll be able to see where you were on this weekly chart. You'll be able to see it, how it went to exactly the exact price. Look at that. ABCD went exactly to 22.32. The low was 22.32. It measured to 22.35 was the ABCD pattern, and boom, away that it went. So these markets, folks, what you're seeing in gold and silver is most probably going to happen very shortly to the stock market, boys. And I'll give you my 2 cents worth for two reasons. One, there's a lot of people in there that don't know what they're doing. Raise your hand, Larry. I'm one of them. Not really. But if you look what we have with Robinhood and all the other stuff and all these ETFs that are out there, is all different kinds of things. We're extended to levels we haven't seen since Hector was a pup. Net Dog's 99 years old. But we're going to see something like that in the stock market. It might not be today. It might not be tomorrow. It might not be someplace else. But that's what we're looking at. So those are the main things. Now, we cover the gold and we cover the silver. The same thing was happening in the crude oil. So let me get this up here and get this up here to show you what we were looking at here in the crude oil. Same thing in crude oil. The market opens. There, the opening was right at the 68 level, and we stayed there. And once we took out Friday's low, boom, we went down, and we went way below the 1.618 here. We went down into the 65 level in the crude oil. So that dropped well over $3,000. The reason why that happens, folks, those are cascading markets, and that's even hard for Tommy Hugard to get in on some of those, because unless you have stop sells in the market to trigger, you're not going to get filled on some of these things. So remind ourselves. By the way, our guest today is Jeff Huge, Alpha Insights. Tomorrow we'll have Tim Bost. I will not be here on Wednesday, Thursday. I'm doing my best to be here on Friday, but I will not be here Wednesday and Thursday. I have to do some things that are necessary for the family, and that's the way it is. Okay, we'll keep a couple of eyes on some of this. The low, I will cover that in just a second here. 877-927-6648.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave Sign up for the opening call risk-free today.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I believe we have a caller from Philadelphia. Mr. Z is in the house. John, how are you?
Larry, I'm very well, and I do appreciate those details you just shared in Tiger TV on COMEX Gold and Silver. I just wanted to share one key observation, but first respond to your request about fills on COMEX Gold last night between that 6 and 7:30 dive period. For what it's worth, I was actually in the den with just a couple of select denners last night upon the Globex opening at 6 o'clock. I actually bought the Dees COMEX Gold at 1763 was the exact price, and I was risking 10 or 11. I was precisely at 604, and what I was doing at that time, I was playing off of the weekly charts, in which there was a 2-year rising trend line that had been tested multiple times that came in at 1755. Well, at 646, of course, that level started giving way. I exited that COMEX trade at 1753 for a $10,000 loss. And I was thinking, okay, well, that's it. I'll go off to enjoy my Sunday evening. 10 minutes later, Larry, the alarm bells started going off on my computer, and I had to do a double take when I saw the price of COMEX Gold down at 1710. I said, "What? That must be bad data." Of course, no, it was not. So I took a loss. Thankfully, it was a very small loss. We bottomed there at that 1678 level, and we popped back up. But this is the key idea I wanted to share with you. We bounced back up, and where was the high a couple hours ago? 1754. That is exactly what is now, as I see it, overhead resistance. Now, go back to that first comment I made. The weekly gold chart. Go back and take a look since that bottom 2018. What was that down there at 1165 or something? Well,
yeah,
just connect a trend line off lows. I think the first one that shows up early 2019. Well, we rallied, of course, all the way up to 2075 a year ago. And there's a rising trend line off lows. And once again, it came in at 1755. We came back, we tested that, busted it, popped back up, tested it this morning, a couple hours ago. What I want to share with you, having broken that rising trend line, which comes in at 1755, this is the weekly chart, I've got one tool that gives me a projection target on that trend line break. And you're just going to say, John, you're just absolutely insane. But the trend break projection is actually to 1450.
Yep.
Based upon breaking that trend line. And what I will tell you, just for me as an individual trader, what I'm watching closely is if we can rally and regain and close above that 1750-60 area. If we can do that, that trend line break is negated. But if we don't get back above that, I just share this with you and your listeners if you care. There's an outstanding target of 1450 if we don't get back above 1750 pronto.
John, I hoped I made that point clear when I was talking about that, because I said if we go below those lows, you do not want to be in the gold market, because you're right, it's $300 lower and $200 lower. So it's very, very important. What surprised me, John, the fact that both silver and gold hit the exact numbers. Now, you and I look at these numbers. There's a few other people probably out there, but frankly, there's not many people that follow, Fibonacci and sacred geometry and patterns and stuff like that. But there must have been somebody with a pretty large pocketbook to come in here and stop the gold market and stop the silver market exactly at the right time. I know my micro mini gold didn't have anything to do with it, but the fact that it gets down there, it just really was really quite spectacular. But you're right, you've got a band now between 1738 and a half all the way up to 1754. That's a $70 range, which is, when you stop and think, John, we moved $18,000 in gold last night, down and up.
Larry, you've remarked this repeatedly in the past 4 weeks as I'm listening to your daily show. You are repeating this idea that very large money is being traded algorithmically, and all that's saying is traders have put in technical tools and do the calculations by computer and enter orders when calculations are met, this, that, or the other. Mm-hmm. I will just speculate. A couple of those hugely capitalized algorithmic traders are in fact just using Ensign software and the Pesavento patterns.
Okay, you got me. Pull the hook out.
I'll see you. Bye.
Thanks. Very good. Yeah, that was a good one, John. I appreciate that. Yeah, there is one other guy out there that uses it, but where he comes from, I'm not even sure. So we'll pay sort of close attention to some of these things that we're watching here today. Okay, let's get back to. We've got Jeff coming up at the break. He's got some really great stuff, and I know you're going to really like. I posted the picture of the Arizona bobcat that hangs out in our neighborhood here. He weighs about 45 pounds, and mountain lions are afraid of this guy. When he walks through the neighborhood, he grunts and people just run away from him. But he's a ferocious little devil, and well, he's not little, but this is not a house cat, boys and girls. This is a real wild Arizona bobcat, and they are flat out mean. I have already talked to you about I want to go back to the crude oil because someone asked the $64 question here on this a little bit later, and that is, if you take a look at this crude oil chart now, this is a 50. Remember, we've been very bearish crude oil, folks, in 74. Now we're trading. We got to 65. We covered it at 69. We left a lot on the table, not unusual. But you'll notice the ABCD pattern that we have here. The fact that you see the D leg ends at 66.43, which would be your buy zone, and that's the 1.27 of the early morning range, which is perfect. Your 1.618 is right below that at 66.25. So you're looking at 22 pips. If you go beyond that 66.25 after buying at 66.47, you're in no man's land. boys and girls, and that's where you don't want to be. You don't want to be in that trade. You can buy it all day long at 66.47 because sometimes they're going to work, sometimes they're not. But by golly, you got to get out of the way. Now, part of the stuff in the Floor Trader's Handbook is when to be aware of things that might not work. Let me give you a perfect example today. We had a beautiful trade set up in soybean oil. It was just absolutely as perfect a trade as you could possibly get. The market had closed at 60.33. We were looking to buy it at 59.75 on a little bit lower opening. And what happened? The market opened higher, went all the way up, took out those highs up there, and then rolled over and went straight down. The reason why we canceled the order was because by the time your order gets here, you're 70 points below the opening price. Not very smart. Stay tuned for Jeff Hughes, Alpha Insights.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Jeff Hughes on the line from Alpha Insights. Jeff, are you there? Uh-oh. That's not a good sign. Certainly hope we had get Jeff on the line here, but evidently That has not happened. Well, I'll tell you what, folks. I'm sure he's coming on because I chatted with him on the line earlier, and I think that that's it. Those of you that like 382 retracements, and I know some of you do, we just hit one in gold right here at 1725. So that's going to be interesting. In other words, the move that we had down there from 1673 all the way up to 1754, we just made that 382 retracement at 1725. So it ought to be in a spot where you would think it was going to have a pretty good correction, but we always are suspect because when these markets have big runs, you can't always stand in front of them, and you certainly don't want to do that. But there's an example of what you have as a super low risk trade because you're right at the point where you don't have to risk very much. And we'll take a look at it. I hope we have Jeff on the line now. I believe we don't have Jeff yet, so I'm not going to worry about it. I don't want to talk about what he's going to talk about because he's going to be reiterating some of this. He's put a special report out because he's been expecting this big blow off in the market, which we've certainly done. We got all the way up to that 4440 level in the S&P that we talked about Friday. The market broke sharply overnight and then stopped exactly at major support again, just like it usually does, and is still chopping around in here, folks. But you're seeing something in gold and silver and some of these other markets that might happen to the folks in the stock market. It hasn't happened yet, but you've got a lot of people out there that are neophytes. They've got, millions of accounts have been opened, since the online phenomenon here with COVID. So there's a lot of stuff going on. Pray tell that we never lose internet connection during some of these things, because if you don't have your order setting in there, folks, shut the front door and raise the rent. You could be in big trouble. So make sure you try to keep yourself protected in there, because it's a vicious animal out there, and you'll be able to see that it could really, really be some bad stuff if it doesn't turn around. I do want to share a couple of these charts. I posted one from Jeff, and I know he won't mind because we've chatted about it. His work is stellar, as you could say. Here is the statistics behind the market during July, August, and September. You'll see that since 1982, you can see we've had tremendous amounts of tops being made between August, September, and October period, and here we are in early. Remember, the anniversary date of the 29 high in the stock market was September the 3rd. I think it was October 7th from 2007. And August 25th of 1987, that was harmonic convergence. So there was another one that is in there. So there's a lot of these things, that are occurring. Now, since I do have I can't answer the phone, so there's nothing else I can do. Not to worry. Well, sorry, folks, for the inconvenience here of the telephone ringing, but I can't do anything about it. We got a couple other trades we really ought to talk about, because we've had some really nice patterns form here that we've been talking about. They've been working beautifully. No, it is not Jeff. He doesn't have that number. You'll notice here the natural gas on the weekly, 3 weeks in a row, we went up to that 420 level. Now we're trading at 401. That's worked out very well. If you're in that, you certainly don't want to let that go to a losing trade, having almost a $2,000 profit in it. That's one that looks really interesting, of course. The other one that we've been following for quite some time, and that is the bonds. They just look like they don't have any friends at all. Okay, we got Mr. Jeff on the line. Jeff, how are you doing today, my friend?
I am well, Larry. Sorry about the confusion.
No. It's probably, I'll tell you, I was so excited about showing us. People kept asking me, where's the chart from the S&P? Where's the chart from the S&P? I'll bring them up one at a time. So why don't you tell the folks what you're seeing in the market now, my friend? I posted the cycle chart from the S&P, and then also the August to September, October sequence that you had shared with us. So if you want me to go on from that level, or where would you like to start? The Dow theory?
Yeah, we can start. Why don't you put up the chart where we've got the August, September, October data. And let me just inform all of your listeners by stating, with a Yogi Berra quote, it's tough to make predictions, especially about the future. But we're going to do our best here, and we've been following this 2021 cycle composite Ned Davis publishes every year that really combines three different cycles: the 1-year seasonal cycle, the 4-year presidential cycle, and the 10-year decennial cycle. And, the composite was slated to peak on Friday at 12 noon, and it did just that. The market made a new high on Friday, both the Dow and the S&P. The NASDAQ 100 actually peaked on Thursday, and we have not taken those levels out as of yet. Now, we've been tracking this the composite correlation at greater than 90%, and if that tight correlation continues to hold going forward, then the composite turns down hard into late October, beginning this week. And so we should expect pretty undesirable performance for the next 3 months if that does occur. And what I would say is that, August, September, and October, as all will know, are typically the worst performing 3-month period of the calendar year. And if we looked at data going back to 1928 through last year, 2020, and what we saw is that the average return during that 3-month period was slightly negative, and the median wasn't much more positive. There's about 55% of those periods were up, and 45% were down. And the best return that was achieved during that period was 24.86%. That happened in 1982, and that was the liftoff point for a 39-year structural bull market that might actually be ending as we speak. The worst performance we saw during that 3-month period was back in 1937, and all will remember that 37 was kind of the year that the world went a little bit crazy. The market was down 26.3%, and we kind of went into this kind of militarized, totalitarian sort of regime around the globe, which ultimately ended in World War II. And so things do have a tendency to kind of go nuts during this period. And what we did is we actually tabulated the data if we were to just center in on years ending in 1, as we are in 2021. So if we go back and we look at the preceding 1931, 41, 51, 61, 71, 81, 91, 2001, 2011, we have a much different set of data, and it actually becomes much more, disturbing. The mean performance was down about 5.5%, and the median down about 3%. The high was only 2.79%, and the low was down 24%. Only a third of those periods were up, and 2/3 were down. So now the odds start to tilt in our favor that, we're probably going to enter a period of higher volatility and potentially some disappointing returns for the next 3 months. So we've been advising clients with this information that, it's probably time to overlay a hedge on your portfolio or take some chips off the table. We published a note that was entitled Reduce Equity Exposure and Raise Cash Levels, and we think that's the right advice for this period of time.
Stay with us, Jeff. You're doing what Warren Buffett does, so you must be doing something right. We'll be right back with Jeff Huge, Alpha Insights. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks. We're talking with Jeff Huge of Alpha Insights. Jeff, I posted a chart of the Dow non-confirmation. I don't know if there's any people old enough to even remember what that was now that Richard Russell's passed away. So you want to tell the folks, I still believe in it because nobody's given it any, value anymore, and I still think it's pretty big. Do you want to tell the folks what you're looking at here?
Sure, absolutely. So, the Dow theory is based on the work produced by Charles H. Dow back in the, early part of the last century. And what Charlie Dow noted was that the industrials and the transportation indexes tend to have a very strong correlation, which makes sense. The industrials are the companies that produce the goods. The transportations are the ones that move them. And what they found is that their indexes had a tendency to confirm one another by making concomitant new highs at the exact same time when the economy was strengthening. But when we saw contrary price action between these two indexes, it usually preceded a period of economic weakness and subsequently market weakness. And so, we had a similar sort of non-confirmation a year ago, last fall, and it resulted in about a 10% correction in the S&P 500. What we're looking at right now is a more extended non-confirmation, and the rule of thumb is really this: the bigger the non-confirmation, the bigger the decline. And so we would expect this sort of a decline to be at least in that neighborhood of 10%, if not worse.
Mm-hmm. Wow, that's really cool. Now, the next chart is your Elliott wave analysis, and you're still holding for this 4,600 S&P, or you?
I think we have to call it into question. We're a little too late in the game. I'm not saying it can't happen. It's certainly a possibility, but I think another possibility we have to give consideration to is that before we get this 4,600, we have a period of consolidation, if not correction, whereby the market digests a lot of the gains that we've experienced over the course of this year and then fully expresses its price potential either later this year or early next year. The other alternative beyond that would be that the market's peaked. And we don't have enough evidence to say that that's the case right now. However, if the S&P were to sustainably close below 4284, then I think we'd have to draw that conclusion or certainly give it some serious consideration.
Mm-hmm. Okay, that makes sense. Now, there's a chart here that I would like to jump to, if you don't mind, because you seem to be great expertise in everything, but this one really caught my eye, and that is the internals of the market for the S&P 500. Do you want to tell the folks what we're watching here?
Absolutely. So we measure internals three ways. We look at the breadth of the market or participation. We look at the momentum of the market, and we look at the up-down volume ratio, or whether there's more volume that's driven by buying or selling. And what we see basically is negative divergences in all of these, meaning that even though the price of the S&P has just reached a new all-time high on Friday, the breadth of the market is struggling to get anywhere close to its prior high that was achieved in early July, on July 2nd, actually. And the momentum has been weaker. Even though it's positive, it's weaker than it was a month ago. And volume, same thing. We haven't seen the same extent of up volume as we saw a month ago. And even though up volume is still outstripping down volume, it's not as strong as it was. So all these things bring into question the strength of the market. So internally, under the hood, beyond price, we're starting to see notable weakness. And this is something that we've seen in some of our larger gauges. This is just a 10-day gauge that we look at. We've been looking at weekly and monthly gauges that have been eroding pretty steadily for the last 3 months. The advanced decline line, for example, has not made a new high in over 3 months. And so, that makes us a little concerned about where we are in this process. And that's the reason that we've been advising caution at this point.
Okay, now you cover sector leadership, and since I'm not a stock person, this is really interesting to me. The financials have really been that strong? They've been the ones that have been running the show?
Just last week, we saw a big spike in financials, and I think the main reason that we saw that is we saw a rise in 10-year bond yields. And the stronger Treasury rates are, or the higher Treasury rates are, the more of a margin a bank can earn on their capital. And so we tend to see financials outperform in a rising rate environment. Now, what's been strange is that utilities have been strong. Utilities were the strongest sector last month, and they were the strongest sector, or second strongest sector last week, which actually prompted us to upgrade the sector to bullish, because what we think will happen is we're going to see a bit of a rotation, perhaps, out of the more aggressive sectors and more cyclical sectors like, say, industrials and materials and energy and technology, and into things that are a little more stable like utilities. Potentially, we could see money continue to flow into REITs because of the heavy yield there, and healthcare has been attracting capital as well. And financials may benefit further if we continue to see rates rise steadily as opposed to spike higher.
Okay, that's really good. We've only got a few more minutes left. Do you have one particular trade you'd like to focus on for the folks? You had a couple really monster ones last time you were on, so what could you pick?
The one that I really like right now that looks to be of interest to me is applied materials. And if we were to focus on that particular chart, what I think is interesting about it is although it hasn't made a new all-time high yet, it got very, very close and missed it by just a fraction. But there's a classic pattern here that's evolving. It's known as a cup and handle pattern. And I think once the stock breaks out above 145, it could run pretty steadily to 175. And I guess one of the reasons I'd be more confident in applied materials, even if we're in kind of this consolidation period, is because this dearth of supply in semiconductor chips is forcing companies to reevaluate their production capacity in the U.S. And I think that there's going to be a massive expansion in semiconductor production in the U.S., which is going to require huge investment in capital equipment, which is what Applied Materials does. They make the machines that make the semiconductors. And so as that investment kicks off, I think what we're seeing here is, the stock is basically just loading up to move higher. And, that could be said about many of the names, but I think this is one that's got, some durability to the idea.
Well, you've got one on the short side that's one of our favorite patterns. That's at AMED, I guess, has just been absolutely smacked. And you've had it marked at those little circles that you have there. That's basically what we call a 135 pattern of lower tops. Yeah. And boy, that's been a monster to the downside. That looks like it's got far more to go too.
we're expecting it to drop to about 125 from about 191 where it went out last Friday.
Wow, that's a heck of a drop. Wow, that's really... Hey, tell the folks how they can reach you, Jeff. Great having you on. We'll have you on again in a couple of weeks, but thanks for joining us today. I'll post it so people can see it in the room. Jeff Hughes,
sure.
Alpha Insights, and his email and phone numbers will be there. Thank you, Jeff. See you soon.
Thank you. Take care, Larry.
You bet, buddy.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, folks, we're back, and someone asked a question about the 382 retracement in the gold market, and I posted it in here. You can see the catastrophic drop from 1765 all the way down to 1773.50. We rallied up to 1754. We came down $35. It's a first harmonic number. It's also the 382 number there at 1724. But anything below 1724 is going to tell us that we're still going to be going down. John Jameson, so many Johns in my life. John Cheverny was on Mr. Z about the fact that if this gold does break, folks, and if it does, let's just take a quick look at this, because there is a possibility that could happen. Let me get the weekly chart up, because it's extremely important here to see where we are. And we could easily do this. Let me draw it in so you can see the importance of this low that we had here last night, because there's your ABCD swing right here. There's the number that Mr. Z was talking about. That's at 1460. You'll take a look at that here. You'll be able to see it. Now, all we have to do is to get confirmation of that is to go back to when we were way back at, 1,100 in the gold. Let's get this refreshed up a little bit so we can see it a little bit more. 1030 was the low way back here. That would take us down. That would be a 61% retracement of the low that we made in December of 2015 when gold was trading at 1030. So there is a possibility that we could get to 1475 without any trouble. All we have to do, folks, is to break that low. Now, what you want to do as a technician is just like what I was looking at now, is to watch the smaller time frames. Go down to your 30-minute to see what the next rally is. My first point of interest here will be the high that we made, way back in 1925. That was the 50% retracement. So what's interesting here is the 382 retracement of this down move is 1772. See you tomorrow, folks. Tim Voss is our guest.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile